Good morning, everyone. It's 10 to 11 here, UK time. Markets, as I've spoken about, needed a reason to sell off. They were in a mega overbought situation for some time, and that reason came out of the FOMC meeting in the late afternoon, evening here in the UK on Wednesday, where Mr. Powell talked about a reoccurrence of the virus in the southern US states, and also he said that they would keep interest rates pretty much at zero until 2023, and I think that woke up the market to the very poor state of the underlying fundamentals, and that precipitated, as you all know, a very strong sell-off. So that's the VectorVest UK, and as you can see, the primary wave has been down for the last 2 days. We've got a green light, a red light should I say, in the price column of the color guard, and that's our first two signals of the VectorVest change in direction, printing a sell signal. Okay, so if I have a look at the VectorVest composite, that's the composite of the UK. I've marked the medium-term market timing system that I've been following in this campaign, and that's still hanging in there by the skin of its teeth. The American market is pretty much the same, folks, and if I look at the American market, primary wave is down. We've got a red light, and as you can see, a very strong day down in the American market, a big gap down at the open. Most of the sell-off, a lot of the sell-off happened in the pre-market in London and in Germany. So I think today's a very important day. So here's what I'm going to do, and I suggest that you do, is that you analyze your stocks that you're holding. If you are a trader, you analyze your stocks before the US Open. So I think that that's the SPX, the S&P 500, and clearly this 3,000 level is a really important level. Now I look at the FTSE. The FTSE is well up this morning, up 70 ticks this morning, but folks, I think it's really important that you have a game plan in place for each one of your stocks, so that when the market starts to get very, very noisy about 2:30 this afternoon, that the emotions don't kick in. So analyze your stocks today before the American Open at about 2:30. That's what I'll be doing. Make sure that you've got a game plan in place for each before the emotions take over, and set, ladies and gentlemen, a line in the sand for each. And that crackdown was quite serious. We're in as I've said 1,000 times, a mega overbought situation. If we do get that DEW signal, then and we're nearly there. If we do get a DEW signal and the S&P cracks that 3,000 level, then invariably that will precipitate quite a strong advance. The bulls are buying the pullback this morning. Today, there's nothing wrong with lightening up a little bit, folks. There's nothing wrong with lightening up a little bit. I'm still holding most of my positions. I had to get out of some of the US spread betting positions yesterday because they hit their trailing stop loss, but I'm still holding 4 positions, and the stops on those positions are all well above entry point. A line in the sand for each one of your shares this afternoon. If that 3,000 level on the S&P goes, I think then we'll probably print a DEW sell signal, and that could easily precipitate a run down to at least 50%, probably 61% of the sell-off, which would take us, let's do it on the S&P rather, numbers probably you're more familiar with, from that low up to that high, and that could easily take us down to 2,600 on the S&P 500, 2,600. Sometimes it can actually go to 2,400 quite easily indeed, and as long as the darn virus stays away, then I think that'll hold it. If the virus situation were to get significantly worse, then without a doubt we'll hit those March lows. So folks, a line in the sand, unless you're happy to actually sit through all of this. If you are a trader, especially your leverage positions, you need a line in the sand, and you need to actually find the emotional discipline to take action if that line in the sand is hit. I hope you find this useful. Thank you. Bye bye.